If you ever look at your bank account and said, man, I'm pretty busy and I'm really selling a lot of stuff, but why don't I feel profitable? Chances are it isn't your sales. It's probably the way your accounting is set up. Welcome back to the channel. My name is Joe, a licensed certified public accountant with over 10 years experience in corporate and public accounting. I have an extensive background in accounting, audits, and taxes, and I'm all about helping you take control of your money and live smarter. Be sure to subscribe to the YouTube channel and turn on all notifications. And check out our blog site where we post every Monday, Wednesday, and Friday. Today, we're talking about cash versus accrual accounting, what they really mean, and why understanding the difference completely change how you run your business. If you're a small business owner, freelancer, or entrepreneur, this is one of those foundational concepts you have to get right. Here's the thing, accounting isn't just about taxes. The way your income and expenses are recorded affect how profitable your business looks. When you pay taxes, how confident you feel making decisions, and whether banks or investors take you seriously. And yet, most business owners were never taught this. So let's break this down in plain English, no accounting degree required. Let's start with cash accounting, because this is where most small businesses start. Cash accounting just means that you record income and expenses when the money is actually moves in and out. You make money, it hits your bank account, you record the income. You pay bills, money leaves your account, you record the expenses. Simple, right? Let's take a look at a clear example so that way you can see what I'm talking about. So, let's say you send a client a $5,000 invoice in March, but that client doesn't pay you until April. Under the cash accounting, that income shows up in April, not March. Same thing with expenses. Let's say you get a bill in March, but you don't pay it until April. It's an April expense. Let's take a look at why small businesses like cash accounting. Some of the reasons why a lot of small business owners prefer the cash accounting is because it's easy to understand. So it's a lot easier because it's cash in and cash out. It also helps to line up with the bank account. So when you look at those bank balances, you're pretty much right on par with what the bank is. And it feels very real because as you get the cash in, you're sending it right back out and you can match it a lot easier. Now, let's take a look at the other side of the coin. Let's show you what cash accounting doesn't reveal. Cash accounting doesn't always show the full picture of you what's truly going on the accounting side of your business. It doesn't show you the money that you're owed from clients, the bills that you still owe that you haven't paid yet, and it doesn't show those future obligations that you still have. So your business might look profitable one month and terrible the next, even though nothing actually changed. This is why many business owners say, I'm working nonstop, but my numbers don't make sense. Now, let's talk about accrual accounting. Now, accrual accounting is when we record the income when it's earned, not when we receive payment, and expenses when they're incurred, not when the cash moves. So basically, what we're saying here is um, income is recorded when we earn it. So once the earning process is complete, then we record the income. And expenses, we incur them as soon as we get it, not when we pay the cash out. Now, let's take a look at a good example so you got to understand accrual accounting a little bit better. Alrighty, let's say you're a business owner and you send a client a $5,000 invoice in March. Under the accrual accounting, the income is recorded in March, even if the money comes in April. Remember, with the cash, we recorded that income in April because that's when we received the money, not in March when we billed it. So under accrual accounting, when we invoiced it, which is in March, we're going to record that income in March. Now, let's look at the other side for expenses. Let's say you receive a bill in March. That expense is recorded in March too, even if you pay it later. Unlike the cash method, where even though we may have received the bill in March and we didn't pay it till April, and then we record the expense in April, it's going to be an April expense under accrual. Once we receive that bill, we're going to record it right away. Alrighty, let's take a look at why accrual accounting matters so much. So, accrual accounting shows our true profitability within our books and records. It also does a better job of matching our income with expenses. And it shows accounts receivable and accounts payable. Remember, those accounts receivable are the money that is owed to us from clients, and accounts payable is the money that we still owe to our vendors. In other words, it tells the full story of your business, unlike cash accounting. Now, this next segment is one of the most important things I tell my clients. Cash flow and profits are not the same thing. I'll repeat that. Cash flow and profits are not the same thing. You could be profitable, but still run out of cash. Cash accounting helps you to see cash. Accrual accounting helps you to see performance. Strong businesses will track both. So, how do you choose which method is right for your business? Cash accounting or accrual accounting? Cash accounting works best if you're a solo business or have a very small team. You don't invoice much, and your business is relatively simple, and you want simplicity over insight. Accrual accounting works best if you're a growing business, you invoice clients on a daily, you want a clear financial reporting, and you're planning for loans, investors, or expansions. Many businesses start on cash and move to accrual as they grow, and that is perfectly fine and normal. So, what's our bottom line for today? Cash versus accrual accounting isn't about being right or wrong, whichever method you prefer. It's really about clarity, control, and confidence. When you understand how your numbers are recorded, you make better decisions and you stop feeling like your business is running you. If this video helped you out today, be sure to give it a thumbs up and subscribe to our channel and come back for more small business accounting tips. And join me next week where we unpack how to set a business budget.